Good morning and welcome to NYSE TV Live. I'm Allison Cossack. I hope everyone is having a great holiday season. Investors are going to be returning to the NYSE this morning after observing the Christmas holiday on Wednesday. Although this is generally considered a quieter week on Wall Street, there is going to be a lot of action taking place right here over the next hour, so I hope you stay with us. So here is what's on tap. We're going to be discussing in just a minute the Santa Claus Rally that we did see start on Tuesday, although it looks like it's taking a bit of a pause today. We are seeing red arrows across the board. We're going to be talking with Investopedia Editor-in-Chief Caleb Silver. He's going to be joining me to discuss what could move the markets during the rest of 2024 and into the new year. Meantime, chess players, they're going to be gravitating to the financial district as the FIDE World Rapid and Blitz Championships kick off today. Chess Grandmaster Vishy Anand, he's going to be joining me to discuss the biggest goals of this year's event. And at 9:30 a.m. Eastern, Columbia University will ring the opening bell right here at the NYSE after its football team captured its first Ivy League championship in over 60 years. Congratulations to them. As I mentioned a moment ago, the Santa Claus Rally did kind of get started. It does encompass the final 5 trading days of the current year and the first 2 trading days of the following year. It did start. It is kind of taking a pause. But here's what else you should know. According to the Stock Traders Almanac, the Santa Claus Rally has resulted in an average gain of 1.3% on the S&P 500 since 1969. Additionally, the Santa Claus Rally has occurred almost 73% of the time since 1990. However, that doesn't include last year when the S&P slid by nearly 1% during the period. On Tuesday, the S&P climbed by 1.1%, turning positive for December in the process. Let's get more now on the market moves, and I want to bring in Caleb Silver. He's the editor-in-chief at Investopedia. He joins us live now. Caleb, great to have you with us.
Great to be with you. Happy holidays to you.
Happy holidays to you. So we did see the market rally into the holidays. We are seeing red arrows across the board today. Is this an indicator of how the year is going to finish up? What are you thinking? Is the Santa Claus Rally going to gain more steam before the year is finished?
We love the Santa Claus Rally and all the indicators from Yale Hirsch and Jeff Hirsch at the Stock Traders Almanac. It's an indicator, so it's not 100% accurate, and it shouldn't mean much. Investors should be very grateful for the year we've had. The S&P 500 up 26%. Very rare, as you know, Allison, to get back-to-back years of 20% plus gains. Very rare to get 3 of those years in a row. The last time we had it was during the internet boom. So I don't think this is that. We got very thin trading, not a lot of tradable information and reports coming out. Very thin economic week in terms of releases and reports. So not a lot of catalysts right now. So trading is thin. And the fact that the S&P and the markets are a little bit lower going into the end of the year, not a big deal considering the big gain. Now, sometimes you see a lot of window dressing this time of year, portfolio managers trying to add positions to catch up for the positions they didn't add going into the last quarter. Sometimes you see that, but everybody's been so long, the big, large tech stocks, the big Nvidias of the world, the Apples of the world, poised to become a $4 trillion company, that I don't think you should make too much of the fact that stocks are a little bit soft going into the final days of the year, but we still have a few days in the Santa Claus Rally to see if that plays out.
All right, let's talk about the Federal Reserve a bit, because the Fed did cause a little bit of surprise to the market by kind of throwing caution to the wind here about how many rate hikes that it would make. Inflation's still sticky, so many would say the Fed is proceeding as it should. What can we expect from the Fed as far as, next year?
Yeah, very interesting. We went into this year thinking we would get 6 quarter-point rate cuts in 2025. Now, if you look at Fed Fund Futures and the CME's Fed Watch tool, there's only one out there that's forecast, another quarter-point cut, and then we might be at what we call the terminal rate. That could be where rates are stuck for a little bit of time, 3.75% to 4%. That's still relatively low considering where we have been, but we waited throughout 2024 for rate cuts and for a recession to come. We didn't get the recession, we got the rate cuts, and we got a slowing of inflation. Going into next year, inflation's still the number, and there's not a lot that can be done about it. Prices are high where we have to spend money, right? Groceries, shelter, transportation costs, medical care costs, insurance. We have to pay those costs. Those prices aren't coming down. So we're going to be dealing with inflation and then possibly the potential impact of inflation if there are tariffs. That could be more bark than bite. So the Fed is going to be in this weird position. And when you heard Fed Chair Powell's conference the other day, they're not talking too much about next year because they don't know too much about next year and the economic policies from the Trump administration. We do know that Trump has said that Powell can keep his job. He's got another year plus on that term. So it's going to be a fascinating year to watch the Fed meetings and to see what happens within the Federal Reserve. And then you got a lot of new outside influences on economic policy, including the Doge crew, the Department of Government Efficiency, a new Treasury Secretary, and a new Commerce Secretary. 2025 is going to be totally fascinating.
Yeah, I mean, we did see exuberance in the market when President-elect Trump was elected again back to the White House. Are we expecting to see that kind of exuberance continue into 2025?
Well, it's about showing investors the numbers. They want to see what the policies actually look like. We do know there's going to be a lot less regulation, so that means more deal making. We do know that there's going to be a lot more crypto enthusiasm. That means much more risk on the table. Think about the unicorn IPOs we might see out of the crypto community. Think about some of the new meme coins that could come into our existence because it's such a crypto-friendly administration. But basically, the message to investors is risk is back on the menu. Green lights for deal making, green lights for mergers and acquisitions, green lights for risky behavior in the crypto sector that usually translates well to stocks. But as you've noticed in the past few weeks, we've had this sort of softness in the Dow Industrials, a lot of softness in the value part of the market, and the big tech stocks and the big growth stocks have been in the driver's seat again. That's what brought us all these gains from the past couple of years. I think we can expect that. We're going to see some $4 trillion companies in 2025. The big get bigger, and individual investors like to gravitate towards the big stocks, the big ETFs, and the big index funds. So I expect more gains. I don't know if we'll see 20% plus, but I do expect more enthusiasm.
Okay, but we can flip the coin here. When you consider Trump's impact on the economy, what do you see could go wrong in the stock market in 2025?
I think investors could stop believing that this thing can just continue to go on forever and that we're going to see all this growth. A lot of the growth and a lot of the performance in the stock market last year and the year before was the AI enthusiasm, the build out, right? The NVIDIAs of the world who are laying the tracks, building the chips, powering the data centers. 2025 is going to be a show me moment for a lot of the companies using AI. We're talking about the Microsofts, Amazons, Apples, and Alphabets of the world that have been spending billions of dollars to build out AI. It's a zero-sum game. 2025 is going to be the show me. Are you actually increasing your profit margins? Are you increasing your profitability because you're using AI? And then we have quantum AI. That's going to be the next new thing that gets investors enthusiastic. We've already seen stocks in that sector. Little micro caps and small cap stocks bang up 1,000%, 500% just on the enthusiasm for quantum AI. I expect to see that be a big theme in 2025.
All right, Caleb Silver, editor-in-chief at Investopedia. It's so great getting your expertise, and we're going to bring you back on the show in a little bit to get more.
Thank you.
All right, we're going to have more NYSE TV Live in just a moment, but first, it all happens here at the NYSE, and 2024 saw plenty of momentous occasions take place inside the walls of the exchange and outside in Experience Square. Earlier this month, President-elect Donald Trump rang the opening bell after being named 2024 Time Person of the Year. Let's take a look back at that moment, and we'll be right back.
If someone came to us 5, 6, 7 years ago and said, can you produce a sugar-free or reduced sugar, low-fat or no-fat, plant-based, dairy-free, indulgent ice cream, we could not have done that. Today, we have the high-intensity natural sweetener to produce it with low to no sugar. We have the protein-based ingredients that are non-dairy that can replace the milk or the dairy. And we have the ingredients to help impart a very rich, creamy mouthfeel to make the product indulgent and also prevent ice crystal formation during freeze thawing. And so it's a capability that we've built that has made us much more relevant to more opportunities than we ever have had. The original stevia leaf extract products that came out, I'll call them the early generations, did though have, which is typical in early generation products, had a bitter or a licorice off taste associated with it. Since then, we've been able to develop through using natural stevia leaf extract, enzymatic conversions to isolate the best tasting stevia components. Mm-hmm. And honestly, they're really great tasting, clean tasting products that are still 300 times sweeter and give you that healthy opportunity to either reduce or completely eliminate sugar in a food product. And then we work from a texturizing standpoint to build back the mouthfeel that's lost when texture, when sugar is replaced. And we call that build back texture.
Welcome back to NYSE TV Live. I'm Allison Kosick. One of the biggest financial stories over the past 2 months has been Bitcoin's climb to unprecedented levels. Following President-elect Trump's victory in the U.S. presidential election in early November, the price of Bitcoin was trading below $70,000 a token on Election Day. It began its record ascent. In early December, Bitcoin hit $100,000 a token, buoyed by Trump's nomination of known crypto bull Paul Atkins for SEC chair. A couple of weeks later, it hit its currently all-time high of above 108,000 before pulling back since. As of this morning, we are seeing Bitcoin trading at about $95,000 a token. Kristen Scholler recently spoke with former CFTC chair Chris Giancarlo about what the digital asset space will look like during a second Trump presidency. Check it out.
I actually think there's something going on there that perhaps viewers haven't heard before. And that is the recognition that actually Bitcoin may be ending its early immature phase, what some people call derisively as the casino phase, into a new phase of maturity and mainstream adoption. And the reason for that is, under Biden administration policies, traditional financial players have been kept out of the space. They've been warned to stay out of the space because of the debanking of traditional firms and because of the SEC's warning lawyers and others not to get involved in crypto. And we've seen that now through FOIA requests that have been forward that the FDIC actually warned banks to stay out. All of that is going to be taken away. Trump is going to allow traditional finance to move into the digital asset space. And I think we're going to now see the institutional development of this asset class. Major American financial houses, whether it be the New York Stock Exchange and its owner ICE, NASDAQ, others, as well as major Wall Street firms, are going to move in a big way. And I think that's going to bring us a real maturization of digital assets. And I think the value proposition now is going to increase dramatically. And I think early investors are seeing that.
Yeah, I am curious to know, Chris, on that front, what does that mean for the price of Bitcoin?
I think we're going to see the price of Bitcoin continue. Well, I'm not a prognosticator, and I would never give investment advice, especially as a former regulator. But when the United States and the Trump administration talks about a strategic Bitcoin reserve, other countries will follow as well. When you've got national governments buying and holding crypto, I think that is going to lead to invariably rise in price. You know, when you have a fixed supply commodity, which is what Bitcoin is, demand can only be met with one thing, an increase in price. If you can't increase supply, only price can increase. So I think you might naturally see a commodity like this rise in price.
What does that mean for gold?
It's interesting that gold hasn't seen a similar rise. You know, gold traditionally, when currency was debased, it was always traditionally good for gold. In an analog world, what gold was to fiat currency, we might find in a new digital world, a digital commodity like Bitcoin is, as we continue, unfortunately, to debase our dollar with the money printing that's been going on over the last decade. I think Bitcoin has benefited from that. And sadly, if we continue to debase our currency, we may find Bitcoin to continue to benefit from that.
Paul Atkins tapped to be the crypto czar for the new administration. What does he bring to the table?
So I've known Paul since we were classmates at Vanderbilt Law School back in the early 1980s. Paul's a dear friend. He's a very serious thinker. Paul is at heart a free market a libertarian. Paul believes we need to use our financial regulatory scheme to further capital formation. He wants to get down to the basics of the SEC's role to further more IPOs, more liquid markets, deep and liquid, and focus on how the SEC can facilitate innovations coming to market and raising capital. So I think we're going to see an explosion of American markets under the leadership of Paul Atkins at the Securities and Exchange Commission.
I want to talk more about financial markets broadly. Of course, we focused on the digital asset space. Scott Bessent, another key player, of course, Trump's pick for Treasury Secretary. What does that mean for financial markets more broadly?
You know, the first Trump administration was known for its very forward-leaning and sophisticated financial regulators. I was recently talking with Andrew Bailey, the governor of the Bank of England, and he said to me that during the first Trump administration, he had been in public life 40 years himself, he said it was one of the best financial teams he's ever seen out of Washington. I see Trump now doing the same thing. The pick of Scott Bessent, the pick of Paul Atkins indicates to me that Trump is really looking for the best quality financial regulator team he can put together. And I'm very hopeful that he will do that.
Mm-hmm. What changes in the regulatory landscape under a new administration?
Well, so the first step is to undo bad policy. We've had some bad policy, certainly with regard to digital assets. I mentioned the debanking of the digital asset space, but also activities by the SEC, regulation by enforcement. Instead of actually writing rules for this new innovation, they've sued companies, or if they haven't sued them, they've just issued what's called Wells notices to stop companies in their tracks. We've got to get rid of that bad policy day one. Day two is to deliver on some of Trump's digital asset promises, a strategic reserve, a crypto council, and perhaps a capital gains relief for digital asset transactions. Then thirdly, to get to the actual policy making, we need to get Fit 21, that is Fit for the 21st Century Act, which was a law that passed the lower house, the House of Representatives, but not the Senate. We've got to get that passed. That will work out the differentiation between what is regulated by the CFTC, my former agency, and what is regulated by the SEC. And we've got to get stablecoin legislation done, and we've got to get good rules and regulations out of both agencies. If we get that, we'll have achieved some very good policy, I hope, for the rest of the 21st century, to allow the United States to truly become the digital asset capital of the world.
Coming up, a chess grandmaster joins me right here in studio as the sport's latest event kicks off today. But first, let's take a look back when FanDuel parent company Flutter celebrated its NYSE listing with a future Pro Football Hall of Famer leading the festivities.
Honor to have the largest gaming platform, the leading sportsbook. Now is the moment you get the global recognition that you all deserve.
I'd like to thank the entire team for their help and hard work. I know this will be the start of a long and successful partnership, and everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Gina, welcome to Floor Talk. It's great to have you on the show.
Thank you. Thank you for having me, Judy.
So, Gina, tell me, how has Bath & Body Works' focus on fragrance driven its success and customer loyalty for the past 30 years?
It's been an incredible, incredible brand, and I'm so honored, actually, to be leading it for the last 2 years. This is actually my second year anniversary, and it the source of it has been just this incredible fragrance forward positioning. And if you haven't, checked lately, fragrance is on trend for some time now. And we put fragrance in 12 to 13 forms. And what that means is we can have these beautiful candles, and that can be Winter Candy Apple, which, by the way, is celebrating its 25th anniversary today. So to your point about 3 decades of performance, but we can also put that in a foaming hand soap. We can put it in a pocket back hand sanitizer. We can put it in a fine fragrance mist. And while that seems simple, it is actually quite a feat to put a fragrance across all those different forms, and customers love it. They want to smell head to toe with fragrance. So it's a wonderful differentiated business model.
Head to toe and home.
True, right?
So now you recently released your Q3 earnings. What were some of the highlights?
We were really pleased with our third quarter. We beat expectations on the top and bottom line. We saw store traffic and conversion be positive and exceeding the benchmarks that we also track, which was great to see. We also had every major category grow. So that for us, that is body care, that is home fragrance, and that's soaps and sanitizers. So all growing. We had some great newness as well. We're known for our innovation and our newness. We did a collab. The one that we have out right now is Emily in Paris, which is great.
Welcome back to NYSE TV Live. I'm Allison Kosick. The FIDE World Rapid and Blitz Championships kick off today right here in the Financial District. And I am thrilled to be joined by Vishy Anand. He's a chess grandmaster and FIDE deputy president. Thanks so much for taking time out today to talk with us.
Thank you for having me.
So talk more about this event. What should we expect, what should viewers expect as this event comes to the Financial District?
Well, it's the first time we're having this particular event in New York. We have had several world championships before, but in the slower forms of the game, the classical version. This will be rapid chess, which is 15 minutes per player per game, and then blitz, which is 3 minutes per player per game. So very fast paced, very exciting, lots of action. Happening first time here, convenient time zone, and we really hope it will attract a lot of attention here.
What makes this moment so significant?
Simply that this is now the second most watched event in chess of all the events we do. The Classical World Championship is ahead. More than 500 players in each event, the men's and the women's event, competing for the title of World Rapid and World Blitz Champion. The strongest edition ever in both categories. All the top players are playing. And there's a lot to look forward to. And for the World Federation, for FIDE, it's wonderful that after having the event in Toronto earlier, we now have a big event again. So we hope to be conducting more big events here in North America.
So you're not just the deputy president of FIDE, you're a 5-time world chess champion and the first ever chess grandmaster from India.
Mm-hmm.
How are you using your experience to enhance these FIDE events and the formats that you're talking about, these rapid and blitz formats?
So the aim is simply to connect with more and more, let's say, new audiences. And that's why the faster formats are very attractive. If you're someone who's curious about the game and just looking in, then here everything finishes pretty fast. You have a lot of action. We have an excellent commentary team, very, very good graphics. All that is improved. I mean, the improvements over the last few years in presentation, in broadcast, everything has meant a lot in chess. And so this is very exciting in that sense.
How do you think FIDE, these events are sort of helping younger fans get interested in chess and getting the less experienced interested in chess? It's not an easy game to play.
It's actually a pretty easy game to play, but hard to get.
Says you.
But hard to get good in. I agree. But the main thing is, it's fast-paced. The graphics have changed a lot. I mean, this is not the game that was played 30 or 40 years ago when conveying what was happening was very, very hard. Now it's effortless. People can watch and consult the computer as to the evaluation. But the commentary team is key. We have an excellent commentary team on our broadcast channel who will be breaking down as many interesting things as possible and trying to make it very, very relatable.
Okay, since I'm sitting here with a grandmaster, I'm not a great chess player, but I have a couple of strategy questions. I'm curious, when you play chess, do you have your moves lined up, or sort of what is your strategy when you start? Is it more defensive? Is it more offensive, the way you play?
It's I do have plans before the game, and they're all tuned to my opponent. So I will always prepare for an opponent, try and detect what is maybe worth targeting, what the weakness is, but my opponent is trying to avoid exactly that scenario and flip it around, so it becomes a contest. So very often you end up in something that you have not planned for at all, and you're just coping there. So it's a combination. You do as much work as possible, hoping to have less work at the board, but you always end up with a struggle.
Do you always protect your pieces, or do you go more for sacrificing your pieces to achieve your goals?
You just play the position. You decide what is the optimum approach, both for the position and for the opponent. Some opponents are very, very good defensively. Others are uncomfortable. They prefer attacking. So you want to target each one and really change your approach for every person.
Before we go, I want to know what some of the notable chess events that are going to be taking place over the next several months as we turn the page to 2025, and how can our viewers learn more about them?
Okay, so we will have our qualification series for the next World Chess Championship, the classical one. There will be a World Cup, there will be a Grand Swiss. So these are huge events where more than 100 players will participate and try to qualify for the candidate stage. We will also have multiple women's Grand Prix. We'll have a World Rapid Team Championship, so the same format as the World Rapid Championship, but played with teams. We have, and besides that, there's the regular chess calendar as well. A good place is just to come to our website. We have detailed information there.
Yeah.
SophieDay.com, and on top of that, there are just multiple places you can look these up.
All right, Vishyanand, thanks so much for coming in and talking about this tournament and giving us a couple of your tips that made you the Grandmaster.
Thank you so much.
Thanks so much for your time. All right, don't go anywhere. The opening bell is up next.
Right now, you're starting to see some trades develop. You can argue it a couple of different ways. Stanley Druckenmiller just this week argued that market's pricing in a Trump victory. If you look at things like small caps and cyclicals and Bitcoin, areas that might get deregulated more, might force more M&A, that's very much a Trumpian trade. And Druckenmiller's point was that if you look inside the market of the internals, you're seeing that. Others would argue, well, if you're counting on a Trump presidency to withdraw from, say, Ukraine, then why is Raytheon at all-time highs? Why is Lockheed at all-time highs? Why aren't a lot of exporters pulling back in their stock price if, in fact, we're going to be putting universal tariffs with the risk of retaliatory tariffs from other countries? So you can kind of slice and dice it any way you want. The Times did a piece a couple of days ago looking at how Harris's economic policy has evolved. And part of their argument was that she's been listening to some Wall Street business types and even some West Coast business leaders, Mark Cuban, Aaron Levy, Reid Hoffman, Reed Hastings, who have all come to her support and maybe are whispering in her ear, hey, we would love it if you'd just take an easier stance on antitrust or crypto or all things like that it would very much be in a business-friendly manner. So, is she listening to that? There's a difference between what you say to a voter and what you say to a donor. And some of the conversations we've heard about among the donors is that she is saying, I hear you. At the beginning of the year, we were counting on 6 Fed cuts this year. We didn't get that. Markets at record highs. So, in fact, the whole hiking cycle, the bull market has just gotten stronger and stronger. So we had this discussion a lot on air. Oh, the market's going to be so disappointed if we don't get the Fed cuts. No, the market.
Welcome back to NYSE TV Live. I'm Allison Kosick, and in just a moment, the Columbia University football team will be putting an exclamation point on a recent milestone by ringing the opening bell. Last month, Columbia won the 2024 Ivy League title by defeating Cornell in the conference championship game. This is historic. The Lions haven't won an Ivy League title in football since 1961. Head coach John Poppy, in his first year at the helm, will officially kick off today's session when he rings the opening bell in just a few seconds. And before we do, let's go right to the opening bell. There you have it. That was the opening bell right here at the NYSE. That was the Columbia University football team putting an exclamation point on a recent milestone by ringing that opening bell. Congratulations to them. All right, I want to bring back Caleb Silver. He's the editor-in-chief at Investopedia. He's joining us again. Thanks for coming back for a second.
Happy to be here.
Yep, let's get a little more specific about some of the stocks that are going to be in play for 2025. Do you think that NVIDIA will still be the star next year? And additionally, which sectors do you think will prosper next year?
Yeah, well, AI has been the story, and NVIDIA has been the story stock within AI because it's providing a lot of the chips for AI power centers, computer centers, server centers, et cetera. But now you have to look at quantum AI. This is the next step in the AI evolution. And a lot of companies, a lot of small cap companies have become very big over the last few weeks with the enthusiasm behind that. So NVIDIA has been growing revenue 100% plus year after year after year. How long is that sustainable? And are there any other companies that could be involved in that ecosystem? Think about the suppliers to NVIDIA. I've seen a huge rally in Taiwan Semiconductor. They're the biggest chip maker on the planet. They're providing a lot of gear to NVIDIA. Who else is in that ecosystem? And then you saw this throughout the year, Allison. The power companies that are powering the computer server centers where the AI processing is happening, those had a huge rally as well. We also know this administration is going to be very friendly to the energy industry, oil and gas. We haven't seen a big rally there in a while, and we've seen very low gas prices and oil prices, but we should see some opening up of that, more drilling. That could be beneficial for a lot of the drilling companies and a lot of the E&P companies that have been pretty soft over the last couple of years. So let's keep a close eye on that one as well. And then the big stocks just keep getting bigger. Apple's on the cusp of being a $4 trillion company. NVIDIA was a $3.5 trillion company. Big stocks just get bigger because individual investors keep putting their money into them every 2 weeks through their 401ks or IRAs.
Yeah, you talked about the ecosystem, but what about the competitors to NVIDIA like Microsoft? How do you see those sort of playing out in 2025?
Yeah, well, these are companies that are spending everything they can to make sure that they are the leaders in AI and in learned language models. So they're going to continue to spend, but 2025 is going to be the year of proving that they can turn that into profitable businesses, right? They can get positive profit margins off of that AI spend because investors are getting a little tired of just the pure spend on AI. Now we want to see it translate into profitability. We also want to look at the market in general. We've been this bull market's about 26 months old. Any bulls that make it past 2 years usually run for 4 to 5 years. So the trend is our friend here, and we're in the first December of the best 6 months of the year. The first of the 6 months of the year through April are usually the best time of the year for the stock market. A lot of trends in the favor of stocks right now, and a lot of positivity and less regulation coming out of the new administration. That's all green lights for investors. The question is, will the enthusiasm continue after 2 straight years of 20+% gains? Okay,
speaking of enthusiasm, got to talk about Bitcoin. What are your expectations there? And for those who are new to cryptocurrencies, do you think they should be buying the coins themselves, Ether, Bitcoin, or should they be going for a cryptocurrency ETF?
Yeah, the good news is they have a lot of choices right now. They can get spot Bitcoin ETFs. Those were very big last year. We may see Ethereum ETF in 2025, given the new regulations and the new crypto czar that Trump has appointed. So Bitcoin, I think, is just in the beginning stages. I know 100,000 looks very expensive to a lot of people, and people who remember it when it was $2, $20, $20,000. But just remember this, there's a finite supply of Bitcoin out there that will ever be mined, 21.8 million, or 21 million, we're at around 19.8 right now. So there's not that much more supply and a lot of demand because institutions have not really invested in Bitcoin yet. Yes, we have as retail investors through those spotty Bitcoin ETFs and through the Coinbases and through our own cold wallets, but we haven't seen institutional money pour in, and a lot of money wants to go into that sector because of the gains have been extraordinary lately. We're looking at a $3 trillion market cap asset class right now on something that a lot of people still don't understand, but you can't argue with price. And if you're looking for diversification, Bitcoin has been that for a lot of investors and delivered excellent returns. I expect 2025 to be a massive year for Bitcoin and beyond.
All right, very quickly, tell me where you see small caps performing for next year.
Yeah, small caps need low interest rates. So if interest rates keep going lower, they borrow a lot of money. That's usually beneficial for them. But if we get this hold on interest rates and we only get that 1/4 point cut, I think it could be another tough year for small caps. Small caps that are around the crypto sector, around AI, are going to do very well. But in general, they need low interest rates. And if we're kind of stuck here at this terminal rate, it could be a struggle.
Yeah, we have seen small caps underperforming the broader market this year, so we will see what 2025 has to offer. All right, Caleb Silver, editor-in-chief at Investopedia. Always love talking with you and getting your great analysis. Thanks for your time.
Thank you, Alison.
We have plenty more to cover right here on NYSE Live after the break. But first, earlier this month, the NYSE officially kicked off the holiday season with its 101st annual tree lighting ceremony. Let's take a look back at that moment.
3, 2, 1.
Sharon, always wonderful to see you. Welcome back to Floor Talk.
Thank you. I love being here, as you know.
Oh, love having you. So you're here today. You actually just reported your third quarter fiscal 2024 results. So tell me, what were some of the highlights?
Well, thank you. Yes, we did. I think the biggest highlight is that it was the best third quarter in the history of the company. So that's a strong highlight. We were up 11% on our revenue and up 26% on our pre-tax profit. So very strong quarter. And I do want to mention, though, that in our fourth quarter year to date, also good, but we saw some softness in our e-commerce business, so we did narrow the guidance a little bit, tweak it a little bit, but we're still expecting right now to end the year with the fourth consecutive year of record results on a rev perspective.
All right, so Sharon, talk about your long-term strategy and your goal to continue expanding globally.
Our founder, Maxine Clark, who started the company well over 25 years ago at this time. And by the way, this is our 20th year on the New York Stock Exchange. But she always said that a hug was understood in every language, particularly a teddy bear hug. And the experience is such an important part. It's the way so many of our guests and our customers often meet Build-A-Bear, if you will, for the first time, is to come in and make their own bear. So that piece of the puzzle is important. And those three new business models are corporately operated, but that's the model that we've always used, actually, and then partner operated and then franchising. So it gives us a lot of latitude, and the latter two are more capital light, and that's what's allowing us to build out our store base. We have opened in 6 new countries in the last quarter, and we're now up to 20 countries, and we're going to have up to 600 stores by the end of this year, up from 500 just a few years ago.
Very exciting, yes. Very exciting. So tell me, are there any new partnerships you've had this year? Anything you want to share?
We team.
All right, Judy, thanks so much for that. Welcome back to NYSE TV Live. I'm Allison Cossack. This past fall, the NYSE hosted its annual Space Summit event. It brought together a unique community to discuss space investment, exploration, innovation, policy, and sustainability. There, Trinity Chavez sat down with Chad Anderson, founder and managing partner of Space Capital, where he has been pioneering investment in the space economy for over a decade. Take a look.
I do want to talk to you about space investments right now are really flowing into startups. From an investment standpoint, talk to me about how the current economic climate we're in could impact the sector.
It's been a few difficult years in the capital markets, but things are starting to turn around. I think the Fed's decision to take interest rates down, 50 basis points cuts, certainly impacting the public markets. It takes a little while for that to flow through to the private markets, but we are starting to feel some optimism, and there's a lot of reasons to feel optimistic when the last couple of years have been pretty uninspiring. So it's a good time just generally in the capital markets. Capital continues to flow. Innovation has continued to push forward in the space economy. And we're seeing not just, SpaceX and the big names, we're also seeing other new companies come up, make names for themselves and raise significant capital to go out and execute their plans. Every quarter we produce our Space IQ, Space Investment Quarterly, talking about the flows of capital, startup activity and investment trends in the space economy. We just published our Q3 report. We're showing $330 billion invested since SpaceX came online into 2,000 unique space companies.
Talk to me more about those key takeaways that you found in your Q3 report.
A few of the big ones, right, is that SpaceX has gone from underdog to apex player, right? They were tapped by NASA to go and rescue the NASA astronauts that were stranded on the International Space Station by Boeing. A big quarter for SpaceX. And they haven't had to tap the capital markets since 2022. They've raised a lot of capital, so the investment dollars have been strong in part due to SpaceX and going out and raising capital for what they're building. Now they're fueling their growth with revenue. So there's a big gap in the investment data that other companies are now starting to step up and fill. AI and geospatial intelligence data. So applying AI to data from space. We have way too much data coming in from orbit. We have decades of archived data. It's way too much for humans to get their arms around unless you run it through an AI system.
How is that AI being implemented into really processing all of this data in mass quantities?
I think a lot of people take space technologies for granted. Positioning and timing that comes from GPS powers the world's largest industries today. The modern global economy runs on GPS. It also runs on satellite communications increasingly, geospatial data, a lot of which comes from space. You combine all of that information to get some really valuable insights and information about what's happening on the surface of our planet. To do that with the amounts of data that we have there's just too much of it for humans to make sense of. So the National Geospatial Intelligence Agency was leveraging satellite imagery as they have for a very long time, and they've recognized this need, and they're turning to AI to help them, using AI systems to annotate and label data to better make use of it, and then to use the AI tools to sort of derive useful insights. And so I think we're just scratching the surface here.
Wow, exciting things ahead. Thank you, Chad, for joining us today.
Coming up, the NYSE community took a trip to the Netherlands this month to celebrate an historic achievement. But first, The Rock, Dwayne Johnson, rang the opening bell at the NYSE earlier in 2024 when he was appointed to the TKO board of directors. Let's take a look back at that moment.
You all operate at the intersection of sports, entertainment, and business. You harness that unique power to create an unparalleled product that you bring to the fans and that you all elevate the status of.
He's the biggest star in the world. He knows licensing. He knows social. Congratulations. Thank you for being part of our life.
What an honor this is for me. Life can be so incredible and so unpredictable, and here we are years later. I get a chance to sit at the table that my grandfather and my dad helped build. You build something great. Ultimately, that thing that you're building ends up building you. There is nothing that we can't accomplish when we do it together. Here we go.
So at Daily Pay, we're really tackling the paycheck to paycheck cycle that so many people are living in. And we're doing that by Pretty simple concept, actually, disrupting the last thing that people wait for in life. If you think about the things that you wait for, right? You don't wait for your shows, you don't wait for food, you don't wait for a ride. Even if you're sick, you don't wait to see the doctor. You just get on telemedicine. But yet, people go to work every day and then wait 2 weeks or more to get paid. And it's creating this paycheck to paycheck cycle. So we are dismantling that by bringing earned wage access to people that can work and get paid in the same day.
And you actually work a lot with NYSE listed companies.
We do.
Talk to me about why you think your concept resonates so deeply with companies like Target and Kroger.
Well, companies like Target and Kroger, they see it is always incredibly difficult to hire and retain frontline workers, regardless of whether the economy is strong or whether we're in a weaker economy. It's always a challenge of really being able to retain great people on the front lines. And so they work with Daily Pay because they've seen that when employees are using Daily Pay, they stay longer. They're more engaged with their employer. And in fact, they feel like they're in a situation that's a win-win with their employer.
How is earned wage access impacting the overall employee experience?
Earned wage access is an incredible impact to the employee experience. In fact, our clients will tell us that it's in the top adopted benefits across their workforce. And it's because it's something so simple, right? If you think about people are working to obviously have money to pay their bills. But those bills don't always come in 2-week increments. So it's very hard to plan life, even if you make a monthly budget. If your rent is due before your payday, right, that's not helpful.
Welcome back to NYSE TV Live. I'm Allison Kosick. One of the biggest storylines as we go into next year, 2025, is no surprise, advancements in the tech sector. Judy Shaw recently sat down with Paul Curie, co-founder and CEO of Teneo, to discuss market expectations, to talk about top concerns for companies and how AI will continue to transform businesses. Take a look.
Paul, welcome to Floor Talk. It's great to have you on the show today.
Thank you, Judy. Thanks for having me.
My pleasure. So, Paul, what does Teneo's annual survey tell us about what we should be expecting for the year ahead?
I think it might be worth exploring the survey itself and the rationale. We have about 1,200 clients around the world. We have about 1,600 colleagues around the world. We're blessed we get a chance to work with these companies on their big reputational, their big strategy and their big financial issues. And every year what we like to do is explore the views and concerns of global CEOs and the men and women who invest in those businesses or those industry sectors. And that's the fruit of the CEO survey and the investor survey that we released today. Looking at 2025, looking at the years following, what are the key issues that CEOs and investors are wrestling with, and what can we learn from those?
And Paul, tell me, what are the top concerns for companies in 2025?
The top issues that emanated from this survey are as follows. One, there is a soaring confidence from global and US CEOs that 2025, particularly the first half of next year, we're going to see growth in the economy. That's a 32-point increase year over year. Second, there is what we call the Trump effect, because bear in mind, we were in the field in the 3 weeks following the election in the US, and there's a direct correlation from CEOs towards their confidence and the election in the US and the result of that election. And third, issues like trade and tariffs and geopolitical concerns are known factors, but they're also, despite those challenges, that confidence level abounds.
Now tell me, how will AI continue to impact businesses next year?
AI is, through our survey, not surprisingly perhaps, is the #1 investment focus in technology for global clients around the world, second only to quantum and crypto at a much distant second. Both mid-cap and large-cap companies are now in their third year of having a direct line investment item on AI. A couple of interesting factors, I think, derived from our research. One is large-cap CEOs who perhaps are used to dealing with technological trends, used to dealing with disruptive technology, are judicious on when they expect a return on that investment, a 1 to 2 year time frame at a minimum. Investors, however, are a little bit more impatient and looking for ROI in the short and medium term. Secondarily, we also talk to CEOs about what are the major attributes for the next generation, for their successor, and for their successor's successor. And for the first time, there is a marked increase in expectation that the role of the CTO is growing in importance, and that the future CEOs need to be data fluent, need to be digitally fluent, and also need to be used to a transformative and constantly disruptive environment. So the investments in AI are about delivering returns for companies, but they're also about what the next generation of leadership is going to look like in those businesses.
And finally, Paul, tell me, how does Teneo help prepare its clients for this new environment?
There's an expectation that there will be a lot of M&A next year. As certain industries had historically low M&A in 2024. There's also a series of industries that might have been on the wrong side of regulatory history in 24 and previous to that, who are expecting a different regulatory environment, which will again feed into expectations around M&A. So we have a lot of clients who are thinking through what is the M&A environment, what is the opportunities for them in the US and around the world. Number two, the US has been identified by global CEOs as well as US CEOs as the #1 investment destination market on the planet. That has a huge impact for all of our clients as they think through the reality that all roads now lead to the US in terms of investing in your business, growing your employee base, thinking about how you expand your businesses internationally. So the M&A, the America First economic agenda, and the strength of the domestic US economy are all factors that we're helping clients think through. How does that impact their supply chain? How does it impact their distribution of investors? How does that impact their global operations? And how does it impact their opportunity to expand their businesses?
All right, well, Paul, it's been wonderful to talk with you. Thanks for sharing insights from your annual survey.
Thank you, Judy. Appreciate it.
And our thanks to Judy Shaw for that fantastic conversation. The New York Stock Exchange is not only home to over 2,400 listed companies, it is also home to the world's oldest living bond, which turned 400 this year. The NYSE community took the physical bond to the Netherlands to give it a proper celebration. Check this out.
To travel with something this old and this rare and this irreplaceable is both exciting and nerve-wracking. Nerve-wracking because if something should happen to it, you cannot get another one, which is the greatest fear of, I think, any archivist. But exciting. You don't get to bring a document like this home that often.
When something turns 400, it's worth throwing a little celebration, and having this bond and having the connection between the New York Stock Exchange and the Netherlands that goes back 400 years is really something to mark. Think about this bond, it's basically raising money to repair a dike and build a landing space for boats to land. And the whole community would benefit from it, and increasingly with climate change to, not just combat climate, but also coincide with the changing world.
You look at something like this and you see not only people partaking in a tradition, but coming together for something bigger than themselves. I don't know that many people necessarily think when they buy a bond that they're doing something patriotic, and I don't know that people necessarily think of it that way, but I look at something like this and that's in many ways what I see.
When this bond was issued December 10th, 1624, it's written that every 6 months it's supposed to be brought back to where it was signed, which is where we are today, and presented, and then the interest is given. And so along the margins of it are all the years going back from 1625, 1626, moving on. It's really a cool experience to be part of it, and it's really cool how it is 400 years old, it is history, but it really is tying into a lot of the conversations we're having in Intercontinental Exchange today around valuing climate, valuing water management, and valuing these products that are, in some ways they're the oldest products we have, bonds, but also it's some of the most innovative stuff is happening in them. If you think about it, we're sitting in the Netherlands, a country that's had to think about water management for its entire existence, but now everywhere it does. If you think about closer to home in the United States, we are seeing water in places we haven't had water before. We're seeing water not in places we used to have water. And so this idea of what can you learn from, a 400-year history, and actually longer, the bond's 400 years old, but the underlying structure that the Netherlands used, is we can all learn from that as the idea of basically coming together collectively as a community to put together the funding, and also not only that, the infrastructure needed to combat or in some ways just redirect climate. we are in some ways looking back to also look forward. And our parent company, particularly Intercontinental Exchange, begins to look at the products we're going to need, not just to track and put data to climate change, but also create the investment products we need to either live alongside it, combat it, or even potentially reverse it.
This one is really a living document. It's not just capturing the purchase of debt from a company or a government. It's capturing that moment and then every year thereafter. So you have the text of the bond itself, of the agreement for how much is being lent, but then all around the edges, every single year that an interest payment was made, you have someone else's hand being affixed to this document. Someone coming year after year after year for, at this point, centuries to engage in the same fairly simple act, but a meaningful act, year after year. And so it's amazing that it's a living document. It's still serving the exact same function it served the day it was written. And that's, in many ways, the beauty of what we're here for, is to still partake in that same act that someone partook in 400 years ago.
The core of what that bond does, or what the markets do, hasn't changed, which is raise the capital needed to do something big and then help everyone hopefully benefit from that, either from what that builds or from investing in it. So what changes around it is obviously the technology, is the data, is the ability to connect things. We have bonds in the New York Stock Exchange that were sold in the Netherlands that were US bonds from the 1700s, but now instantaneously there's a global ability to invest in products and trade with each other and share information and share data.
That's the beauty of this document, is that you look at it and you see the physical evidence, line after line, of that promise kept by both sides for 400 years, and hopefully 400 more. It's an important document. It should get its due and get to see the world and get to come home once in a while.
Let's take a quick check of the markets before we go. It is a shortened trading week this week because of the Christmas holiday, so things are a little quieter, but we are seeing the Dow fall 145 points. That's after back-to-back gains that we did see with the Dow. We did see that Santa Claus rally kind of try to rev up earlier in the week. Obviously, it's on a pause right now as we see the Dow falling for the first time in 5 sessions. We are seeing robust gains, though, for stocks for 2024, and that's despite the Fed cutting rates fewer times than expected. But we are seeing that we have 4 more trading days of the year for that Santa Claus rally, which actually wouldn't even end until January 3rd. So there is still hope for that Santa Claus rally. What could be the reason for seeing the red across the board here with stocks? Well, we did see weekly jobless claims come in slightly cooler than expected at 219,000 versus the expected 225,000 estimate. We are seeing that continuing claims are at a 3-year high. We're also keeping an eye on Bitcoin at $95,000 per coin, and we will continue watching the markets. Let's take a live look at the floor of the New York Stock Exchange as we say goodbye for now. That will do it for today's coverage of NYSE TV Live. I'm Allison Kosick. I hope you have a great day. I'll see you tomorrow.
Thank you for being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing.
This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.